Next week, new regulations begin to roll out, making it harder to buy paper and say you have gold. And that part of this story is a pretty big deal. Basel III regulations begin to roll out next week, depending on when you're watching this. July 1st is when this whole thing kicks off. And the popular story around here is that this is a huge deal. So get ready, because this Basel III rollout will kill the unallocated gold market and get rid of the price manipulation. And that shift is going to punch up demand for physical gold. It's going to send the price to the moon. But just for fun, there's an angle here that nobody seems to be considering. These new regulations could actually reduce gold demand in the short term. How's that, you ask? Well, if large US banks stop trading it, or institutions simply don't want the hassle of the new regulations, well, what's to say that wouldn't lead to less capital being parked in gold? So am I just being negative here? No, well, I'm actually being consistent with my view on Basel III. I've talked about this all along. So let's just start with what it is. Basel III is a set of banking rules that were created after the 2008 financial crisis, and those rules were meant to regulate reserve assets. So it was meant to force banks to hold more stable, reliable collateral. It's a good idea. A big part of Basel III is the net stable funding ratio, the NSFR. NSFR says banks need to back their assets with long-term stable funding, and this applies to gold in a few ways, especially how it's held in reserve. Unallocated gold, the paper gold that we always hear about, the contracts that banks trade, that is no longer given the same risk weighting as physical allocated gold, the kind that can't be imagined up or traded against when the actual asset isn't even real. Now, quick pause to give a shout out to Summit Metals. If you're looking for the actual gold or silver, not the imagined kind, well, they have it. Hit them up at summitmetals.com. Now, back to Basel III, it sounds like if regulations prevent the banks from showing unallocated gold contracts as reserve assets, with similar value to actual physical gold, well, that would spike the value of the real stuff. Now, that's the idea here. So Europe and the UK started enforcing Basel III in 2021, but the US held off. Now that's changing. July 1st, 2025 is when the US banks with more than $100 billion in assets will have to start following the full Basel III rules. Now, timeline here, it's important. There's a 3-year phase-in with full compliance expected by mid-2028, but this is the first time US banks will have to play by these stricter rules on gold. So what was I saying about Basel III not sending the price of gold to the moon? Well, first off, it's very likely that banks will just find ways around the rules. And second, you just heard me mention the 3-year phase-in. That's going to take time. And third, banks could simply pull back from unallocated gold trading, resulting in less capital in the overall gold market. Now, what am I talking about there? Well, the paper gold market, futures, ETFs, unallocated accounts, that could shrink as regulations just make it more expensive to operate. So more regulation, more cost could mean less trading, less liquidity, and who knows, lower price in gold. That's a possibility. So in the short term, it could actually be bearish. And this is more or less the opposite of what we've been hearing. The prevailing story is that because there won't be enough supply to meet the new demand that's brought on by regulations requiring actual physical gold, well, the price will go up. It'll go way up. Now, just to be realistic here, I haven't heard that story from anybody who doesn't have something to gain from the price of gold going up. I think that's important to mention, because if we were to see physical supply issues that just lead to logistical problems, overall gold demand could simply dip. And I know that sounds crazy, but capital could flow to easier reserve options. Now, if it sounds like I'm just giving what ifs, well, we have a sample case to look at, like the EU and the UK. They rolled out similar Basel III regulations in 2021, and it turns out the price of gold didn't take off. Banks found loopholes, they found workarounds. The paper gold market actually shrank a bit. So if you're expecting a gold price explosion from the Basel III regulations rolling out in the US, well, it didn't happen before. So Basel III is coming, but it's probably not going to be the kind of gas can on the campfire situation that people like to go on about. It's more likely to be a whole lot of nothing, like we saw in Europe, or even possibly a bit of a wet blanket for liquidity. Now, that is just a comment on price catalysts. Either way, this will take years to play out. We aren't going to get a moonshot July 1st, so sorry to be the bearer of bad news if you were banking on that. But the upside here is a shift toward physical gold is really a good thing. Favoring actual audited physical gold over paper contracts isn't going to make current gold holders ultra wealthy overnight, but it will make it harder for trading operations to spoof and manipulate prices, which means fewer shenanigans. And let's call it good there. Let us know what you think about Basel III coming to the US. Are you on the edge of your seat waiting for the foretold impact, or do you think the hype maybe oversold it? Let us know. And while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.